Ladies and gentlemen, good day and welcome to the Gulf Oil Lubricants India Limited Q1 FY23 earnings conference call hosted by Yes Securities. As a reminder, all participants' lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note this conference is being recorded. I now hand the conference over to Mr. Nitin Tiwari from Yes Securities. Thank you and over to you, sir.
Thank you, Vikram. Good day, ladies and gentlemen. On behalf of Yes Securities, I welcome everyone to Gulf Oil Lubricants India Limited's first quarter FY23 earnings call. We have the pleasure of having with us today the CEO of Gulf Oil Lubricants, Mr. Ravi Chawla, and the CFO, Mr. Manish Gangwal. I will now hand over the call to Mr. Chawla for his opening remarks, which shall be followed by a question and answer session. Over to you, sir.
Thank you, Nitin. Good evening and good day, ladies and gentlemen. Welcome to the quarter one call for Gulf Oil Lubricants India Limited. It gives me great pleasure and happiness to share with you that we have got off to a very good start in the quarter one for FY23. You will recall that quarter 4, which is usually a very high quarter, last year was a record quarter for us. And what we have seen in quarter 1 is the all-time record in terms of volume for us in terms of our core lubes at 34,000 KL. The entire team here is quite satisfied with what we have done in this quarter. Of course, we look at the challenges ahead, but it's been really a resilient, growth-oriented performance by the company. There were a lot of inflationary pressures on all cost line items, many challenges around us. But having achieved the highest ever quarterly volumes for our core lubricants really gives us a good start to the year, and we can look at how we can continue to grow our industry-leading market share growth and other objectives for the year ahead. We have gained share in all categories, and if we look at quarter 1, we have seen robust growth in our B2B, B2C business. And what is really gratifying is that our B2C business has actually grown very well and has improved the ratios going in the last quarter, which was normally we used to have a 55-45 ratio. This has gone to 60-40, and that was our objective, to increase our distribution, to increase our B2C sales. So that is very gratifying. Of course, industrial, B2B, OEM continue to grow very well, and the ratios have improved also, which has helped us. Challenges of the cost has obviously impacted, but we have handled it very well. And I think we have really looked at how we managed our key input cost. There is obviously staggered price increases, good price increases announced, and margin management has been a key focus. Manish will talk about that later. What we also mentioned in the last quarter, you'll remember, is how do we reconnect, how do we re-energize growth. We had a lot of regional meets at all levels with our trade, with our teams, and now that the markets are fully open and operating near normal post 2 years of pandemic, and our theme, which was to reestablish, connect and re-energize growth, has really got us back to distribution in many ways. And this is really encouraging for us. The numbers are all there. Our quarter 1 revenues crossed 700 crores for the first time, highest ever. So that's been a really good quarter for us. Our marketing and sales initiatives, both above the line, below the line, have reignited. Now as COVID has eased out and helped us to really gain our distribution and personal connect at all levels. Definitely last year quarter, if we take the year-on-year comparative, that was impacted by COVID. So some of the numbers you'll see excellent growth, but still it's an achievement, and I think it's industry leading again, where we have seen significant growth in terms of our numbers. Over last year quarter, EBITDA is up double, and PBT is up 80% plus, similarly PAT. So really good numbers. A lot of challenges as we go ahead, but the start has been very promising. And of course, we'll explain a few other things as we take the questions. Now hand over to Manish to cover some of the other highlights. Manish, over to you.
Yeah, thanks, Ravi. So overall, as Ravi mentioned, it was a fantastic quarter, closing of 700 crores of top line. And the core lubricant volume, which came at 34,000 KL. You will recall that we have been doing a category called AdBlue also, which was not the high numbers in earlier quarters. So now from this quarter onwards, we have seen a definite significant pickup in the AdBlue volumes as well. So the AdBlue volumes really are over and above this 34,000 KL. So what we are talking here, 34,000 KL, is the core lubricant volumes. for the quarter, which is the highest ever lubricant volume for us. So that is quite heartening. And from the gross margin perspective, you will see that in spite of significant cost pressures, crude going up and base oil going up, additive costs going up, and also the rupee depreciation, which caused imported products to be costlier, we have been actually able to not only maintain our gross margin, slightly improve from quarter 4. So sequential improvement in the gross margin, and overall, of course, we have delivered almost double the EBITDA from last year YOY basis. But because of certain challenges on the, I would say, inflationary pressures on the other expenses like freight going up, and also AdBlue volumes increased the freight amount. Plus, we have spent more on A&P. As Ravi mentioned, we have started reconnecting people, and travel has gone up. So all those factors, including the OEM royalties, because the OEMs also did almost an all-time high number in this quarter. So OEM royalties have also gone up. So overall, I would say the gross margins well maintained and pricing actions taken. Of course, slight dip in EBIT percentage is because of the other expenses, because of the factors I mentioned just now. Overall, I think this quarter, in the month of April, we paid the buyback amount also. So the buyback which was declared earlier, the buyback amount was paid to all the shareholders in the month of April, and we closed the buyback on 25th of April. So these are, I would say, the quarter highlights, and we would like to now take the Q&A. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. We request the participants to restrict questions to 2 per participant. If you still have more questions, please join the queue afresh. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star followed by 1 on your touchtone phone now. We have a first question from the line of Hemal, who's an investor. Please go ahead.
Hi, sir. Thank you for taking the question, and congratulations for a great set of numbers. Just some basic ones. Working capital, sir, this time, how much are we going in line with our last guidance that we're going to go towards reduce our net working capital? What was our net working capital this time?
So yes, we have been able to slightly improve from March levels in terms of number of days on both receivables and inventory. But as we speak, the revenues are going up, and this quarter also, as you see, even from March quarter, there is a 10% increase in revenue. So revenues are going up. So working capital will be in line with the revenue going up because of the price increase taken. The value of the products have gone up. But overall, yes, we have been able to reduce the number of days in terms of all working capital items.
So how much would it be, sir? Like, would it be less than 115, 110, or?
Sorry, in terms of number of days, you are saying?
Yeah.
So overall number of days, I think around 110 now we are.
110. And is it still your guidance to go back close to 100 days?
So we will continuously work on working capital. The point is that the inflationary trend is not in our hand, and if the revenue is because of the volume plus the price increases, then in proportion the working capital quantum goes up. But I think we are almost at the peak of the working capital at March, and this year we should see the working capital further going down from March levels what we had done last year, because last year I think we have fully funded the working capital at 1st March. So every quarter we will see improvement on it.
So, and what would be our net cash position as of end of the quarter?
As I mentioned, we have paid out 100 crore of buyback in the month of April, but we continue to maintain roughly a net cash of around 180 to 200 crore.
180 to 200, okay. And finally, from my side, as you said, it's rightfully so. So the base oil price, would you have an average number, or how much it will increase quarter on quarter, and where do you see it going in the next 1 or 2 quarters?
See, in every call we highlight that there are various grades of base oil. So, it is very difficult to give a range because different grades of Group 1, Group 2, Group 3 base oils have different price levels. In line with crude, the base oils have gone up during the quarter. And if you see our price increases, we have taken price increases in April, March end and April. And again, we have announced one more price increase towards the end of June, which will be coming in effect in the current quarter. So yes, base oil has gone up, and I would say additives cost, other input have continued to go up, but we have been able to not only manage the margin, but rather slightly optimize on it, and that is also because of the good mix. We had a very good sale of B2C. So all these factors have contributed in maintaining the yield. I would say now crude has come off from the peak of 120, 125 it touched in the month of May. So the translation to base oil and other costs happens with a lag time of 1 to 2 months. So we'll have to really wait and watch on all the variables, including the rupee, INR versus USD, because India imports a lot of base oil. So we have to really see both, and then we'll take our margin calls.
So you believe you will...
So I'm sorry to interrupt. We may come back in the question queue. Mr. Hemal.
Sure. Thank you.
Thank you. We have next question from the line of Sabri Hazarika with Emkay Global Financial Services. Please go ahead.
Yeah, good afternoon, sir, and congratulations on good set of numbers. Firstly, just wanted to know, you have you've mentioned that your volume was around 34 million liters, and this is excluding AdBlue. So like to like, probably it's not. From what you've been reporting in the past, I think this is slightly different. So for example, last quarter you have reported around 38 million liters kind of a run rate. So against that, what would be the like-to-like comparison in terms of volumes? And if you could break it up between core volumes and AdBlue volumes in total.
Yeah, Sabri, thank you. I think the last quarter we had close to 33,000 KL of lubricant volumes and 4,500 KL of AdBlue. But this quarter, since the AdBlue volumes went up to 14,000 KL in a single quarter, which was perhaps the figure more than last full year, so we thought it prudent to disclose those numbers separately. So 34,000 KL for the current quarter is a pure lube number, and 14,000 AdBlue on top of it.
Okay, so it is like almost 48,000 KL. So that is like a...
Yes, and also then that means that we have not only grown 36%, close to 36% on core lubricant over last year Q1, sequentially we have grown our volume over March quarter by 3%, which, as you know, and everybody on this call will remember, that March is usually a very high quarter for us because a lot of distributor incentives, etc., are linked for the March end full year figure. But this quarter has surpassed even the March numbers in terms of core lubricants. So it's been an all-time high, excellent quarter for us in terms of core lubricants.
And what about AdBlue? What's the reason behind this big jump?
Yeah, so Sabri, Ravi Chawla here. See, let me explain to you. AdBlue is a complementary product which is going into BS6 vehicles. This basically treats the emissions. It's an AdBlue solution which is sprayed, and it is separate chamber it is put in. It reduces the NOx value of the emissions. So this is started. We are one of the pioneers, one of the first 2 companies in India to manufacture it here. We have a license from VDA Germany. We control the quality a lot. So we've been working with OEMs right from the last 8 years on this. Now, finally, after BS6 coming, BS4 some vehicles did change to this, and BS6 all it is compulsory. You have to have both the technology which is called EGR plus SCR. So this is basically a treatment fluid which goes in. It is a separate chamber. It is roughly 3 to 4% of the petrol consumption. It doesn't get mixed with petrol. So this is an add-on complementary product which all commercial vehicles, diesel engines are using. We have a tie-up with 10, and we want to focus on the quality part of it. We don't want to get into mass. The market is huge, but we are focusing through our distribution touch points and OEMs. So it's a complementary product for our consumers, for our trade partners, for everybody. So it's an add-on margin. I would say it's single-digit margin, but it is doing well. And we're also seeing that the current pricing is good, and we want to focus on the high-quality segment. We will not be going for a huge volume in this, but we'll be also ensuring we can service all our customers efficiently. Just to let you know, we have 10 OEMs right now on this, both commercial vehicle, all diesel engine, and cars and SUVs.
Right. So just last question, just as a follow-up to this only. So definitely the base changes drastically for the company if we were to do a forecast using these numbers. So whatever the Q1 numbers would be, probably there will be a realignment in terms of the EBITDA per liter as well as the volume outlook. So would you suggest that we should go ahead with it, or is there any risk of again going back to a normalized kind of a run rate?
I think you should focus on the core loop, which is 34,000. That we have given you a track versus last quarter, so that should be the focus now.
Okay. And Q1 FY22, what would be the core loops?
25,000 KL. So I think the total volume was 27,500 and AdBlue was 2,500 roughly. So 25,000 KL was the core loops.
And for the full year FY22, just last question. For the full year FY22, how much would it be?
It was roughly around 12,000 KL.
12,000 was the AdBlue volumes.
Oh, just a minute. Let me check the full year number. I will get back to you in a second on that.
Yeah, that's all from my side, and all the best.
Thank you.
Thank you. We have next question from the line of Adesh Verma, an investor. Please go ahead. Mr. Adesh Verma, your line is unmuted. Please go and ask your question. You may want to unmute yourself, sir, if you have muted yourself.
Yeah, hi. My first question is, if you could just give us an idea of what were the utilization levels for the Silvassa and the Chennai plant?
So for the quarter, we were close to 90% utilization in terms of both the plants. On an average. I mean, Silvassa was almost running capacity, whereas Chennai was at around 70%, so almost 90% close to that in terms of utilization.
Okay. Along with this, if you could just give us an idea on what is the outlook for growth in sales volume for the rest of FY23, given that we have been listening a lot about rural slowdown market and general slowdown due to inflation. So if you could just give us an idea of what is the outlook for growth.
The slowdown we are seeing is only in the motorcycle category. Actually, we have seen a good pickup in commercial vehicles. Industrial sales are doing very well. We are seeing our PCM also is growing well. Obviously, we have different segments. So if you look at the overall industry, our sort of forecast is normally if GDP is growing, it grows half of that. And of course, there are other factors which the long drain lubricants and all are there. There's a growth in automobile population of new vehicles, old vehicles, servicing, rural grows, penetration. So if you take all these factors, it is expected the industry will grow at least 3 to 4%. If things now the markets are open, there is no COVID closure. And normally we target 2 to 3x minimum in terms of volume growth. So our outlook is to obviously maintain our growth. And as you see, we have been having good growths. Even this quarter is a good demonstration of that in terms of the growth. And with all our segments where we are focusing on, we would continue this growth path, we feel. There will be obviously some pressure on the cost in quarter 2. We are expecting, and quarter 3, in fact, we are also looking that we should be able to, if things remain steady on the base oil and things are open and going, even our margin, we hope we can look at better margins from quarter 3, but obviously we would try even quarter 2 to see how we can maximize. There is some pressure because pricing has gone up very high in the market. For many categories like motorcycle, you see that there is obviously some pressure. But we are increasing our distribution to be able to offset some of that with better distribution. B2B continues to grow very well. So as you know, industries are growing very well, and lubricants are consumed right across all industries. Some slowdown happened in steel sector, maybe last few months, but other sectors we are also improving our customer base.
Congratulations on the good number. That would be all from my side.
Thank you so much, Arish.
Thank you. We have next question from the line of Bhagyesh Kagalkar with HDFC Mutual Fund. Please go ahead.
Hi, sir. Congratulations on the great set of numbers. Hello.
Thank you. Thank you.
Yeah. So this regarding the your praise statement is mentioned. Okay, it's a small statement that you collaborated with a machine company for the factory field requirement. This must be part of the B2B. But on B2B, can you throw more light, because this segment is not prone to disruption unlike the automotive one. So volumes and your expectation of volume for next 3-4 years, etc.
Yeah. So you see, for us, there is a B2B industrial portfolio, and there is so we sell through distributors, and we also sell directly to customers. Yeah. So if you take that, obviously our market share is not very high, but we are seeing excellent traction in these segments, and we have a very dedicated team. And our focus is to grow both the distributor market, which supplies to small and medium industries right across the sectors, and we also have direct sales to steel plants, to plastic industry, to textile industry, wind. So all the other segments is where our focus is. And if you take our overall market share, if it is about 7-8%, in our shares in industrial is half of that, 3-4%. And that is where we are focusing. In terms of volumes, Manish, in terms of mix of our B2B, we have been giving
60-40.
Yeah, 60-40 is there. But of course, our B2B also takes OEMs. So industrial is it is part of B2B. So this is the way we look at industries per se. And our B2B is, of course, route to market more with OEMs. A good part of that is industrial, and that is growing. Including our B2B will include the infrastructure customers. So roughly about 15 to 16%, 17% will be pure industrial sales to manufacturing units.
Okay. Thanks, sir. Thanks, sir.
Thank you. We have next question from the line of Chirag Fioloke with Ratnatraya Capital. Please go ahead.
Hi, good afternoon, sir. Thank you so much for taking my question. The first thing is that can you just share the breakup of the 4 segments that you usually do? DEO, personal mobility, industrial.
Yeah, so as we have highlighted in the press release also, diesel engine oil has done very good last quarter, and their share has gone up to 41% from 37-38%. Personal mobility also has done very well, and actually it was in the range of around 18-20 last few quarters, but this quarter it is 21%. And industrial is at around 14-15%, and others is at around 23-24%. So that's the breakup. Overall, I think led by diesel engine oil and personal mobility, the B2C ratio has gone up, as we highlighted earlier, to 60-40. So that's a good improvement, I would say, and good performance.
Very clear. That's helpful. So just a question, the diesel engine oil would include the AdBlue revenues also?
No, so these numbers I'm talking are all excluding the AdBlue. This is out of the lubricant proportion. On top, we have that 14,000 KL of AdBlue, which we are now saying that it is a separate category. So this is a mix of the lubricant I am talking about.
Okay, understood.
AdBlue is separately. AdBlue is separate. Please don't. For us, lubricants is the core lubricant. So whenever you refer to that, AdBlue would be a separate liquid.
Got it. Perfect.
And for the last year, I think Sabri earlier asked about the full year figure. The last year full year volume of AdBlue was 16,000 KL.
Got it. That's helpful, sir. Just one question on the the other manufacturing expenses or the expenses other than the employee expenses that seem to have gone up around 30 CR this quarter. Could you help us understand what are the things that sort of led to that increase? And are we still running 2 shifts in most of our plants, or Has any plant shifted to more than that? Can you just throw a little bit more light on this part of the cost structure?
So for few days we had to run our plants on 3 shifts, but it is not all working days. Just to keep balancing the demand versus production. But overall, largely I would say still operating on 2-shift basis, and hence we have spare capacity to take care of the growth which we are projecting. Your another question was slightly, we could not hear it properly. Can you repeat that?
So what I was asking was the other manufacturing expenses from on a quarter-on-quarter basis has gone up by around 30 odd crores. In the opening remarks, you had mentioned a few drivers. Would you quantify that and help us understand the bridge? Where how much was A&P last quarter, how much is A&P this quarter, and so on and so forth?
So we usually don't give the breakup, but the key components, as I mentioned, have been higher A&P, higher travel, and of course freight, because 14,000 KL of AdBlue also you need to transport it, so higher freight, as well as the OEM royalties which have gone up. So it is a combination of all the four, I would say, largely.
And these OEM royalties are, I'm sorry sir, but what are they exactly? They are royalties paid to the OEM for the first fill.
No. So these are royalties paid to the OEMs for the sale of products in the franchisee workshop, in their franchisee workshops, in the aftermarket in some cases. So we have different combination of arrangements with OEMs, and on some of those products we need to pay royalties to them.
Got it. And that number has gone up because that volume has gone up.
Yes.
Yes.
And we are also adding OEMs, so it goes up both ways.
Okay, got it. I'll come back in the queue. Thank you.
Thank you.
Thank you. We have next question from the line of Ambar Shukla, an investor. Please go ahead.
Hello.
Please go ahead.
Yes.
Yeah, thanks for the opportunity, sir. I have a couple of questions. So, first of all, I just want to know how is our procurement of base oil divided between imports and exports currently, and what are the advantages or disadvantages, or maybe, if we procure it domestically?
You see, first of all, India does not produce full requirement of base oil. So there is a lot of import happens, and almost every player has to be dependent on imports for the purpose of fulfilling its requirement. So it's not about a choice. Also, the national oil companies have their own lubricant brands, so they consume their own production of base oil first for the innovation, and then surplus is sold out in the market. So the market dynamics is like that. We have been importing close to 70% of our base oil as imported. We have some contracts with some of the overseas refiners, and that has been quite helpful for us, in terms of these volatile times. Overall, I would say we buy local, but it depends on the availability. So it is a mix of both import and local, depending on the availability.
Okay. And
just to add here, Amber, is the base oil that we are using, they also add to the consistent quality, and the product approvals and the consistency of the base oil is also important. So these are also elements where we develop sources of base oil, which stand for example, we are pioneering the long grain oils. We have been using the best base oils there, the group 2, group 3. So just to highlight one more thing is that not only do we tie up with them commercially, it is also the quality and the approvals which are based on the base oil specifications from various refineries.
Okay. And sir, do we have domestic supply of all grades of base oil, available?
Not all grades. We have few grades, but some grades are only available in the imports.
Okay. And what was our pricing response to the increase in base oil, and in which grade of product, basically?
Sorry, the question is not clear. You are talking of which grades of base oil has seen the price increase?
Yes. And what was, our pricing response to that?
So, various grades of base oil will increase based on demand-supply situation. Sometimes the Group 1 prices increase slightly more than Group 2 depending on where the demand is coming from. If the demand is coming from, Asian or African countries, the Group 1 demand will be more because that's where the large consumption is. And if the demand is from Europe and US side, then the Group 2 prices and Group 3 prices will go up. So it depends on demand and supply. Also, the crude always has a role to play. So it's very difficult to say which one has gone up how much. Overall, this is the trend depending on demand and supply, the grades of base oil. But the differences are not typically very high. If X base oil goes up $100, the other would go up in a similar range.
Okay. And so just last.
Sorry to interrupt, sir. Would you like to come back in the question queue, Mr. Shukla?
Thank you.
Thank you. We have next question from the line of Hemal, an investor. Please go ahead.
For taking my question again, I'm sorry I had two more left. So what is our battery revenue for the quarter?
Yeah, it's around 20 crore rupees.
And
in the batteries now,
yeah, sorry.
We have, as mentioned in the last call, we are working out on solutions to localize the production, and we are in advanced stages. Hopefully, from quarter 3 onwards, we will be able to source some of those from India itself, and that will help us penetrate the market more.
So you do have a number for this year? Like, I mean, is there like 100? Like last couple of quarters we have been speaking on this, but I know due to COVID we had some restrictions. But do you have a goal as to in the next 2-3 years where to reach in this battery business?
Yeah, so we want to aggressively grow this category. That is what we can say. As of now, without giving any guidance on the numbers, we would say that the focus is to aggressively grow the battery segment for us.
And so are you giving, because you are now giving AdBlue volume separately, are you, what percentage of the revenue would it be contributing?
You see, again, as I mentioned, and Ravi mentioned in his remarks that it is a low margin, high volume product. So the realization also are much lower than the overall lubricant side of it. But we would like to not quantify the revenue part of it, but overall we can say that this is a very low margin and low realization product as compared to the lubricants.
So should we consider like for the year, this year, like 10% of the revenue? I mean, not asking for exact, but just less than 10% somewhere as a revenue number for the whole year?
Yeah, I think so. That is roughly the estimate.
Yeah, so let me tell you, Hemal, this is a complementary offering. When we offer a commercial vehicle diesel engine oil, we have to offer this for the customer, even the OEMs. So this will vary. We are going to focus on the high quality market, but overall, AdBlue is a single digit margin product. And of course, it all depends on the supply chain. We are making this in both our plants, but we also have satellite plants which are under our quality supervision. So some of these are available because there's also logistics on supplies of AdBlue. So we will play it by what happens. So currently we are seeing the quarter which just went by, we saw good increase, and our OEMs also are asking us for these products because quality is very important. There are other products which don't meet the quality standards. And this is something which is useful both for the environment and required for the BS6 in terms of the performance and the emission levels. So we will have to play it by the year, but yes, if the trend is good, we will continue hopefully getting a single digit margin on this, and also the pricing is lower. It would form roughly what Manish mentioned every quarter like it has in the last quarter.
Okay. And absolute.
I'm sorry to interrupt, sir. Please come back in the question queue. Thank you. Ladies and gentlemen, in the interest of time, kindly restrict questions to 2 per participant. We have next question from the line of Jimesh Sanghvi from Codes Advisory. Please go ahead.
Hi, sir. Can you share the percentage of advertising percentage to the sales revenue?
This quarter, it was around 3.5%.
3.5%. And so your employee cost has seen a sharp increase. So what was it relating to? Were there any bonus payouts or anything that were there during this quarter?
So we follow usually the April to March cycle in terms of performance and reward. So you will see that usually there is an increase based on, this is the starting of the first quarter, so you will see that increase.
So what?
There is a very, I would say, increases from roughly 4.5%, and we are more or less in the same band, 4.6%. Because also because the top line has gone up, you see, as a percentage, the impact is not much.
So should we look at it as an absolute number, or should we look at it as a percentage of revenue? Because how should one look at it? So
basically, I think the absolute number will give you a better indication for this quarter. Will give you an overall trajectory for the year.
So on an average, can we expect it somewhere around 30 odd crores to be the average run rate for the employee cost?
Yeah, this quarter it is around 32.5 crores.
Yeah. So going forward, like in a normalized scenario,
that should be the average.
Okay. And so the other income the interest expense has also seen a sharp spike. So were there any forex related losses or anything, or MTM losses which were included in there?
Yeah, absolutely right. So as you know, rupee depreciated quite sharply during the quarter, and the reason why our EBITDA has grown strongly, but there is some impact on the PBT and PAT is also because of the forex, which is part of the interest cost for us, finance cost. Close to 8 crore rupees on account of forex volatility, although we cover more than 50% of our positions are always hedged, but on the open exposure there is a mark to market. A large part of it is unrealized as of 30th June, and if rupee tends to appreciate, we can reverse part of it. But overall, I would say yes, the increase in finance cost is because of the forex.
Fine, sir. Thank you.
Thank you.
Thank you.
Thank you. We have next question from the line of Bhavita Chetwani, an investor. Please go ahead.
Hello, good evening and congratulations on a great result. I just have two questions.
Well, I'm sorry to interrupt. We're not able to hear you very well. Please use the handset and speak a little close to your mic and ask your question. Please repeat your question again. Thank you.
Is it better now?
Much better. Please go ahead.
Yeah. So just wanted again on the AdBlue thing, and I know that this quarter's result, which means the 700 crores of turnover, does not include AdBlue. But I guess even though it was a small volume in 2Q21 and 1Q22, the turnover included that part. So what was the turnover amount which was included if we have to see it on a comparative basis for 2Q21 and 1Q22 for the AdBlue?
You see, as I mentioned in one of the earlier questions somebody asked, you can, because this is a figure which we will not like to always comment on, but as a combined figure, I would say you can take roughly 8 to 9% of the top line as AdBlue.
Okay, for both the quarters.
Yeah, this figure is not to be consistently followed. It's an add-on product for us. We basically define our growth with lubricants. Okay.
Yeah. But since it is included in the last quarter, we just wanted to understand.
Yeah. We just wanted to clarify because there has been a growth in this quarter.
Sure. And the second part around, I guess you had already said that, but I guess I missed. In the 1Q22 where the volume was total 38, around 5 to 6 ml was AdBlue, right?
Sorry, come again. Your line is again not clear.
And the 1Q total volume of 38, around 5 to 6 ml was AdBlue and rest all is core lubricants. Is that right?
No, 38.
No, which?
Yeah, out of 38. 1Q22 volume. 1Q22 and March 22.
Yeah. Okay, you are talking from a calendar year perspective. I think you are following a lot of MNCs.
Yeah.
Basically, it was 37,500 KL full volume. And out of that, 4,500 was AdBlue, 33,000 KL was core lubricant.
Oh, thank you again, and congratulations again for your result.
Thank you
so much.
Thank you. We have next question from the line of Hemal, an investor. Please go ahead.
Sorry, sir. One more final question. Is not being able to answer.
Hemal, please go ahead.
One last question was on the recharging that the company we had invested. Any indication, and I remember like we had spoken in 2000, around a year back, by 2021 or 2022, we would have some plan for the EV side as to how do we integrate amongst our distribution points and where are we going to go in the next 3-4 years. Do we have any line of sight or any testing or any outcome of the testing in that area that
we
you can share with us?
have shared that we are testing it. This is an evolving space. Once we are clear about the product success, we will make the next move. So the status remains the same, Hemal.
So I mean,
at the right time.
Okay. So no timeline, any timeline for that, like any October, December, January?
We have to talk to a lot of people. This is a very developing area. So once we talk to OEMs and others, then we are clear we can make a move once that comes. Right now, it's not the time. We have not had anything.
And then EV fluids, are you seeing any pickup with any OEM tie-ups that you may have more recent in this quarter?
No, I think you must have read this in the this. It is a very small stage, but we have the range and we are approaching many of the OEMs.
Okay. Thank you. Appreciate it.
Thank you so much for all your questions.
Thank you. We have next question from the line of Chirag from Ratnatraya Capital. Please go ahead.
Hi. Thank you for giving me another chance, sir. Just one clarification. Can you give us a little bit of a guidance on the EBITDA margin or EBITDA per liter? However you look at sort of profitability of the business. Do you think this is where we are now, given the AdBlue contribution is expected to continue probably? Is this a new normal for us, or are we hopeful to revert back to sort of older margins?
See, ideally we would like to definitely go up from the levels we have, because of course AdBlue is one factor, but if you see, in spite of such a high AdBlue, our gross margins have been quite intact, and I would say rather improved from March quarter. So it is all about adding up some of the parts. AdBlue is on as an additional line of, I would say, business, is an helpful tool. But overall, from the lubricant side, there have been significant cost pressures. We have been able to successfully manage and pass on a large part of it to our customers, consumers. If there is a tailwind or a help from the rupee side, from crude side, and we get an upside, obviously there is an uptick with it. We have taken another price increase in this quarter end, towards the quarter end, which will also be realized in the current quarter. So the effect of all this, we are expecting an uptick from Q3, because everybody carries inventory of raw materials at least for 1 to 2 months. So we expect everything else remaining the same. There should be some improvement from Q3 onwards on the EBITDA margins, or I would say gross margin side.
Very clear. And if I may squeeze in another question, if that's okay.
Yes, please.
Okay, so this is a more a high level, sir. We've obviously talked about these things on the calls many times, and even our large competitors talk about it. But from the perspective of EVs coming in and ICs, sort of the new sales of ICs going down, is my understanding correct that the stock of vehicles, which is estimated, I think, close to the 300 million, please correct me if I'm wrong, that is where 95% of our sales lies, the stock of vehicles, as opposed to the new vehicles that come on road? Can you just throw a little bit more light on this and a few more numbers? I know you've always talked about market growing till around 2035.
The number is the same. 95% of our lubricant is for replacement, and 5% is only the factory fill.
And 95% would then refer to the stock of vehicles which are already on road. So even if tomorrow...
absolutely right. Stock of vehicles, the equipments, all the machineries, all those are currently using.
So basically, you see, there is a vehicle park which is there, and there is an addition to the vehicle park every day. As OEMs keep selling the IC-based vehicles, which we have studied, and we foresee that for the next 10 to 15 years, there is a growth which is going to continue in the lubricant side in terms of lubricant consumption, because of new vehicles being sold and the vehicle park on the road. And also we have to remember that India is an under-penetrated country in terms of vehicle per capita. So while the increasing demand, some of the sectors will have some share of EV. I think a large part of the vehicles are going to continue to be on the ICE side.
Right. Just one clarification.
Sorry to interrupt, sir. I'll come back in the question queue. Thank you. We have next question from the line of Jimesh Sangvi from Code Advisory. Please go ahead.
Yes, sir. A couple of other things. How should one look at the AdBlue volumes going ahead? Should we continue to see this kind of a growth or volume numbers going ahead as well?
No, Jimesh, we have explained this, that currently this quarter went up. That's why we explained. So we will give you a tracker for AdBlue. We will tell you about that. And this is about 12,000-14,000 we are getting per quarter. So it should be at this level going forward. So we will report it separately also.
Okay. But you don't expect it to further jump up from here on?
No, it can jump. If we find it that it is decently profitable for us, we have the right distribution. We don't want to get into price products. This is just a complementary product which we are supplying. We could even supply more, but we want to restrict ourselves to do a certain band of business in this. Of course, some of it is we have to do because commercial vehicle customers, OEMs would demand this, that this goes as a package.
Okay.
Because the product that goes with the OEM, please remember, it's a very high quality product, whether it's lubricant or it's AdBlue. And they would prefer to have, because there's sometimes even in lubricants and in AdBlue there is spurious. So we want to ensure that we give the right product with our customers for what they supply to their new vehicles, and of course the older vehicles, as the BS6 vehicles get older, they would also continue consuming this AdBlue from various touch points, even petrol stations.
Okay. So do we need to have an additional capacity or something for this, or this gets kind of...
We have, but as I told you, there are satellite plants which we control in terms of QC, so we have expanded there, and we'll take a call if it is going to be a sensible thing to do.
Okay. So secondly, can you share the margins that one could look at in the battery segment, probably?
Which segment?
Battery segment, which we are planning to grow.
Typically, the battery segment margins we have seen in the aftermarket, because we are not into supplying batteries to the OEMs. So the margins are going to be in the similar range as lubricants, as for lubricants.
Okay. And
we are focused on two-wheeler. We are focused on two-wheeler battery as of now. That is why we have chosen, we have a strong brand, Gulf Pride, the same brand, and we have 12,500 touch points, and we'll grow these now with the local supplies which we get. So we're looking at a similar margin to what our lubricants makes.
Thank you. We have next question from the line of Nemish Shah with MK Investment Managers. Please go ahead.
Yeah, thanks for the opportunity. I had just one question. I just wanted to understand what is the price rise that we have taken in the core lubricant segment, both QOQ and YOY?
So, we have taken one price increase, as we mentioned in the last call, 3 to 4% in our retail segment. And then there is another price increase which has been taken towards the end of the quarter, June end, which is also to the tune of 3-4%. Of course, in the B2B segment, it is a bit of negotiation with the customer that keeps happening every quarter. And OEMs are formula based. So there is a formula every quarter, or with some OEM 6 monthly, where with the global base oil indices, the price increase or decrease happens. So this is the way we take our pricing calls. So from the retail side, I would say both price increases for the quarter, one in March, April, and another in June, would be combined to the tune of around 7 to 8%.
Okay, understood. Yeah, thank you.
Thank you. We have next question from the line of Nirav Savai with Abacus Investments. Please go ahead.
So thanks for the opportunity. So most of my questions are answered. Just one thing about this OEM royalty part, which you said has gone up this quarter. So how much is that OEM royalty this quarter vis-a-vis last quarter?
You will not be able to share the absolute number, Nirav. But as the volume goes up, the OEM royalties will keep going up. Depending on the quarter in which we sell how much as a percentage to OEM.
Okay, right. And another thing was about this...
OEM products are sold as factory fill, as in their dealerships, and it is also sold in the aftermarket for certain brands. So based on the segment where we get the traction, the royalties would differ. And these are all contracted with specific OEMs. So just to give you this, that, obviously it helps the business. OEMs also get high quality product with good service. Their customers get. We also get a benefit because we are able to take the distribution up, and it helps us to sell our other products also. So it's a good win-win thing. And last quarter we have seen a very good growth in OEMs. They're also adding many OEMs. So as we add OEMs, some of them will have a royalty or some of them will have pricing. So this is the way the business is growing. Also, in addition, of course, we sell our own brands in the bazaar, which is a large part for us.
Right. So this AdBlue would be contributing what, about 8 to 9% of revenue this quarter, or would it be lesser than that?
Yeah, in that range.
Right. All right. That's it from us. Thank you.
Thank you.
Thank you. As there are no further questions from the participants, I'd now like to hand the conference back over to the management for closing comments. Over to you, sir.
Yeah. Thank you so much. I think, as we mentioned in the call today, we have seen a good, strong quarter to start off the year. And we are very confident that, the industry will also grow this time to a 3 to 4%. And hopefully, quarter two, we have obviously some challenges on the margin, but Gulf is always focused on the 2-3x of industry growth rate. So we continue that. There are definitely exciting segments as we look at it. Our growth in PCMO, our growth in the B2C business, and side by side we are seeing industrial growth and industrial lubricants going up. So it's really going to be a good quarter. I think some of reestablishing connect and realizing growth in the B2C business and in the other businesses is doing very well. It's bringing back a lot of personal touch at all points, and I think Gulf has this DNA that we can connect well, we can involve. We are having a lot of meets at retailer level, at our own level, with customer levels. Our technology, Gulf Oil technology, is available in India, one of the companies which has technology based in India with the R&D. So all this is helping us. We're going to roll out, as we are rolling out, a lot of extensive reach programs to gain distribution, to add customers, definitely focusing on our margin management. So this is what we're going to look at. And as Manish mentioned also, quarter two, some challenge, but we want to get back to our margins, hopefully sooner. And definitely we see a lot of optimism in terms of the current year. And there is obviously ability to pass on the cost increase and of course give benefits. So we will continue to do that. And thank you so much everybody for your questions. Hope we've been able to answer them to a level of good satisfaction. Thank you again.
Thank you very much, sir. Ladies and gentlemen, on behalf of BS Securities, that concludes this conference. Thank you for joining with us, and you may now disconnect your lines.